By the way, the other stock that's seeing a bit of a decline over the last few days, again, back of that NBFC pack is Piramal Enterprises. Just pull out that stock once again, again there's some serious selling happening over here as well. So that's the other one, which apart from of course Indiabulls Housing and a couple of others, is seeing a bit of a selling pressure. Madhav Dhar is with us, managing partner of GTI Capital Group. Madhav, hi, good morning. Thanks a lot for joining us. Now, you have seen many market cycles. This has been remarkable, right? So bipolar. I mean, the Nifty and the mid-cap performance, of course, is very stark. But within the Nifty, it's a group of 4 or 5 stocks which is really holding up the index. Your thoughts on what's going on, and what does this mean for the overall market?
No, I don't think it's that remarkable. It happens in many cycles that you have a divergence of leadership in a late-stage game, and I think the same thing has happened around the world, especially in the U.S., where the tech stocks held up, especially the big FANG stocks, for a long time, and the rest of the market was struggling, and that the tech stocks declined, came back to where the market was. And so this is not atypical of cycles. I think the interesting thing that's happening around the world, there is a tug-of-war between liquidity, which is starting to ease both globally and in India at the margin, and growth that is clearly decelerating, certainly around the world, particularly in China and in Europe, and even the US looks like it's topping out. So I think the issue is going to be whether when liquidity and growth collides, what wins? And the history is that liquidity usually wins. So my best guess is that we are past the point of tight liquidity around the world. And in India, we've had many issues, both in terms of the RBI, which has now made a surprise cut, which may or may not have immediate effects, but it's a signal that we are past tight liquidity. So I think that is supportive of where we are today in certainly the Indian cycle.
Sure. By the way, the stock that's really taking a knock now is Nalco. It's down almost about 7% and big volumes getting traded there on the back of the weakness in its margin performance. Madhav, hi, good morning, and thank you for joining us on the show. The big event that transpired over the weekend was the slowdown that we've seen in the auto space, particularly with names like Tata Motors, Mahindra & Mahindra cutting their guidance. Do you see this as a more structural slowdown, and would you stay away from auto stocks, or do you think it's just a 1-2 quarter blip?
I think it's probably a 1 or 2 quarter blip. I think the odds are the growth is going to accelerate a little bit. And, if we get interest rates, the structural interest rates down, not just the signal repo cut by the RBI, and some of the liquidity issues that are now front and center, and we go through that, I think interest-sensitive sectors of the market should hold up. So I think it may be a little too late to start worrying and panicking about housing stocks or auto stocks for that matter. So no, I don't hold a negative view on that.
Madhav, good morning. The problem seems to be that we come down to talking the same few stocks, whether it is some of the retail banks or whether it is some of the top-line IT companies. And that's the complaint that I think a lot of investors have with this market. How are you looking at some of these bets? Would you still stick to them, or is there something in the overall beaten-down value space where you'd rather take a contrarian call?
Well, everybody has their biases, and I'm both boring and biased in the sense that I first think about the market. And as I think we've discussed over the years, I think there is way too much emphasis on trying to pick the right stocks at the right time, both in terms of timing and in terms of alpha generation. I think it's far more important to be structurally long at the right times. And within that, if you can add value, so much the better. And there everybody has their biases, whether it's a sector bias or a growth bias. I personally have sort of a value contrarian bias, so I am attracted to things that are beaten down, where there is demonstrable value, even though they may not be the hot areas or the sexy areas or the great story areas, but that's a bias. That's like, I like chocolate ice cream. versus vanilla. No, there's not a right answer.
Okay, going forward then, Madhav, what do you think is a bigger risk to this market, the global slowdown, or in case of India, the election that we have in April, May?
I don't think the election is a risk. In fact, I would go to say that I think elections have always been overestimated in India in terms of what they may do to the markets. And clearly, uncertainty is worse than bad news. So I think in the next few months, you'll have some uncertainty, and the markets may not break out one way or the other. But markets like change in fundamental underlying economic policy. So if you think change in politics is going to lead to material change in policy, whether it's labor policy or privatization or something fundamental like that, I don't think the markets really care about politics. And we've seen that over the last 4 or 5 years. We had a change of administration, and it was very heavily analyzed what it may mean, and it hasn't been a big decisive thing. So I'm not concerned about elections. I am concerned about the fact, as I said, there is a tug-of-war between decelerating growth around the world and hopefully accelerating liquidity. The Fed has signaled that, the RBI has signaled that.
Sure.
We are starting to work through some of the structural changes in liquidity.
Sure.
So I remain optimistic. I think you've had the correction.
All right. Oh.
Madhav, we leave it there today. Thanks a lot for joining us. That's the view from Madhav Thar.